Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live copper showcase brought to you by Red Cloud Financial Services. I'm Mark Bunting, the host of RCTV. Thank you very much for joining us today. We have a great show lined up with 6 executives from 6 different copper developers. They're going to tell out their projects and their prospects, but also discuss all the volatility and turbulence in the marketplace and uncertainty, not to mention that word as well, and whether this is all affecting their business or maybe not. We'll have about a 10-minute conversation with each of them, and then they're each going to stick around for a panel discussion toward the end of the show. Now, what about copper itself? Well, we have a table setter before we get to our guests with Red Cloud mining analyst Taylor Combaluzier, who covers the copper market and copper companies, among other metals and companies as well. So let's bring in Taylor Combaluzier, and he's going to give you the macro picture on copper. Taylor, take it away.
Yeah, thanks for the introduction, Mark. And uncertainty is certainly a key word that is apt for the near-term outlook. But overall, I'm going to tell you a few key reasons why we do have a positive view on the copper market in the medium to long term, despite those near-term headwinds and uncertainty. So let's just talk about first where we're at today. Copper prices have been marching higher in 2025 so far, largely due to the looming threat of tariffs from President Trump. He's threatened tariffs of 25% on all copper imports. That has caused a flood of copper to head to the US to front run those potential tariffs. And that's caused traders to try and capture significant premiums. So that's essentially driven a large disconnect between prices on the COMEX and the LME. Today, LME copper is sitting around $4.16 per pound, whereas on the COMEX it's at $4.72 per pound. So that differential is about 56 cents per pound. In terms of equities, we have seen prices pull back a bit due to softening copper prices following their huge run-up in response to those tariffs, as well in the pullback essentially on fears of recession due to Trump's trade wars. The Global X Copper Miners ETF, for reference, is down about 12% year to date. So with that said, let's kind of look in the short-term outlook. So in addition to those tariffs, a weaker US dollar and a tightening concentrate market are continuing to support prices. There has been hard economic data that has been positive out of the US, such as housing starts, building permits, industrial production, etc. Those have been in line or better than expected lately, but there is concern about the soft data and concerns around the economy. The case in point on that is the latest consumer confidence report. That was quite bleak out of the US. It showed consumer expectations for the future were at 12-year lows. So in addition to that, we do see a tightening in the copper concentrate market. That is driven by increasing smelter capacity in China, Indonesia, India, and the DRC. That has caused spot TCs to hit a record low of negative $21.1 per ton on March 20th. We also see a decline in copper exploration and discoveries recently. The copper concentrate market already fails to fill demand, and this will get dramatically worse towards the end of the decade. I'll get into a bit more on that a bit later, but we do believe there are some other, but these factors are being reflected in where copper prices are today. So while we do anticipate volatility due to the tariffs and fears of recession to largely drive the copper price in the near term, we do see several other catalysts that may help provide momentum for the junior copper mining sector. So those include the first one being measured to increase American mineral production, the second being Chinese stimulus and positive economic signals, and then lastly, potentially weakening US dollar. So we'll talk a little bit about each of those. So first, in the US, there is a bipartisan bill before the Senate that could designate copper as a critical mineral that would unlock tax credits and government grants for copper producers. President Trump has also signed an executive order to expedite mining projects, prioritize mining on federal lands, create a fund to support mining initiatives, and encourage Congress to reevaluate mine waste regulations. There's a couple other things in there, but overall, we believe these initiatives could spur mining investment in the US to develop a domestic supply chain. We also see this increasing investment abroad in cases where the US would need to secure critical mineral offtakes when the mineral in question is not readily available domestically. In terms of the second catalyst, being that positive economic news out of China, we'd point to industrial production and retail sales that were up in February. That signals to us a steadying economy. In March, the government there also announced it would be maintaining its economic growth target at 5%. And it also announced a special action plan for boosting consumption. That's essentially a set of initiatives to boost income growth, enhance consumption capacity, and promote the upgrading of major consumer goods. Specific details of that plan are still pending, so if it's well received by the market, we could see another boost from that. And then for our last catalyst, we typically see an inverse relationship between the US dollar and copper prices. So a weakening US dollar could help drive copper prices up. So far this year, the US dollar index has declined 9% year to date. So that's clearly showing US currency is going down in terms of value relative to others. And then lastly here, before we move on to the long-term outlook, I did just want to note four key themes that could help drive copper prices as well. So I won't go into details on these, but just some food for thought essentially is first being that AI growth will boost power consumption and thus copper demand. The second, the significant lack of reserve growth and disruptions at the mine level in recent times. Third is the depletion and falling grades at top copper mines. Those are also an ongoing concern in the industry. And then lastly is the potential undersupply of concentrate as miners face increasing labor and energy costs. So the bottom line kind of near term is we expect volatility due to tariffs and fears of recession to largely drive the copper price. Outside of that, there are numerous catalysts and themes that we believe should support higher copper prices as well. So we'll see, what dominates the day there, but volatility is quite poignant right now. So taking a look at the longer term, we do believe there will be support for higher copper prices in the coming decades. We still do believe in the green energy transition to drive that copper demand largely. And that's going to be achieved through electrification. We'd expect government decarbonization targets to be met by adoption of EVs. There might be pullbacks in the near term on that, but the long-term trend, I think, is still pointing towards that. And those EVs require 3 to 4 times more copper than internal combustion vehicles. So positive for copper. So we do see that surging. That's essentially the demand for that is the copper that's going to be used in vehicles is going to essentially double to 6 million tons by 2031 as that adoption of EVs and hybrids increases. And then if we look ahead kind of between 2021 going out to 2035, overall copper demand is expected to increase by about 82%. Turning to the supply side of the equation, the amount of copper required, between 2022 and 2050 is more than all the copper consumed in the world between 1900 and 2021. So that's a very, interesting fact and one to keep in mind as we're talking about this. We do see a maximum supply shortfall ranging between 1.6 to 9.9 million tons for 2035. And that really underlines the huge task of ensuring that there's enough copper capacity to meet demand. So how can that supply be increased? One, through bringing new mines online. 2, through expanding existing operations or increasing output, and 3, enhancing recycling. Some of those are easier said than done. There has been a lack of major copper discoveries in recent years, despite higher exploration budgets. Only 18 major copper deposits were discovered in the past decade, so those are those with over 500,000 tons of copper. So clearly there is work to be done here. The bottom line for the long term is that increased demand for copper from growing EV and the green economy will provide a catalyst for majors to replenish and grow their copper pipelines. We believe junior explorers and developers are well positioned to capitalize on this looming supply gap if they're able to make a major discovery or define and advance an economic deposit. And then just as I wrap up here, I wanted to provide a couple top picks. So these were recently published in a copper report that's available on the Red Cloud research portal. These are in no particular order. The first top pick being Aldebaran Resources. We have a buy rating and $3.30 target price. So with 36.5 billion pounds of copper equivalent delineated in a fresh resource, Altar is one of the largest undeveloped copper gold deposits in the world, and we do believe it should be sought after by major mining companies. Aldebaran is funded through development through a $250 million US deal with Newton Holdings, and the big catalyst on the horizon is a maiden preliminary economic assessment expected in the third quarter of this year. My second top pick is Koryx Copper. We have a buy rating and $3.80 target price. Koryx is a Red Cloud banking client and guest firm. So with a new team in place that has a track record of advancing projects in Africa that ultimately culminated in sales to larger mining companies, along with a full treasury, we believe Koryx is poised for re-rating in 2025 with numerous major catalysts on the horizon. Those catalysts include 55,000 meters of drilling and ongoing metallurgical work, along with an updated resource in the fourth quarter of this year, as well as a preliminary feasibility study, as also in the fourth quarter. And then my last top pick, NorthIsle Copper and Gold. We have a buy rating and $1.70 target price. NorthIsle is a Red Cloud banking client. So the company has a revamped 2-stage PEA that shows that the North Island project is a highly developable project in a tier 1 jurisdiction. It presents a more realistic development scenario and allows for additional exploration upside to enhance project economics. We believe North Island is one of the best copper gold porphyry deposits in the hands of a junior in Canada. Upcoming catalysts for them include a spring drill program, metallurgical and geotechnical work programs, as well as baseline environmental work to support a PFS in 2026. And then just to wrap up here, we do remain optimistic that the copper space is poised to improve over the medium to long term. However, we do expect volatility to prevail in the short term as the risk of tariffs, trade wars, and recession linger. So with that, I'll turn it back over to you, Mark.
All right. Thank you, Taylor. Great job there. Very thorough on the macro picture for copper and some of the fundamentals. I just want to run down the agenda quickly here before we get to our guests. In order, we'll be talking to Ivanhoe Electric, followed by Oroco Resources. Then we'll have Arizona Sonoran Copper. After that, Foran Mining. And then we'll talk to Koryx Copper. And last but not least, Sam Lee over at NorthIsle Copper and Gold. We'll be talking with him. And then that's followed by the panel discussion with each of those executives represented in that chat. Now we want to bring in Taylor Melvin. He is the CEO of Ivanhoe Electric to kick things off here. Great to see you, Taylor. Thanks for joining us. I think you might be on mute there, Taylor.
How do I
take yourself off mute?
I'm not showing myself on mute.
Yeah, no, we can see you and we can hear you now.
Okay, great. So that's being controlled on your end. So thanks. I appreciate you having me here today, Mark.
For sure. Now, I know that you have big news today. We don't want to bury the lead, but and we'll get to that, of course. But it's probably good to give some context for our viewers in terms of the business model at Ivanhoe Electric, whereby you are using advanced technologies to explore in the United States. So can you give us a snapshot of the model before we get to the big news?
Sure, Mark, happy to. So our founder and executive chairman, Robert Friedland, who's a global leader in the mining industry, based on his unparalleled track record of success as an entrepreneurial explorer and technology innovator. Robert brought Ivanhoe Electric public in the United States in 2022 as a U.S. company focused on finding and ultimately developing new sources of key electric metals needed to support domestic demand in the United States with a focus on copper. And so our company combines a unique and proprietary set of exploration technologies with a high quality portfolio and a broad portfolio of exploration projects that's focused on the United States and with a focus on copper. Our most advanced project in the United States is our Santa Cruz Copper Project in Arizona, about an hour south of where I am sitting currently in Tempe, Arizona. And we'll talk more about that project in a little bit. But our technology platform includes our Typhoon ground-based geophysical surveying system and complex algorithmic-based machine learning software developed by our 94% owned computational geosciences subsidiary based in Vancouver. And the combination of this hardware and software technology platform really gives us a powerful technology-driven exploration platform that allows us to accelerate the exploration process. And we've leveraged that powerful technology platform into very valuable and expansive partnerships with leading global mining companies, including Ma'aden in Saudi Arabia and with BHP here in the United States. We're a leading explorer for minerals in the United States, and we're conducting large-scale geophysical surveys in the Kingdom of Saudi Arabia. And this scale of massive exploration is what our industry really needs to find and develop new sources of critical minerals. We're very excited about the potential for large-scale discoveries in the underexplored areas of the Southwest United States and also the Kingdom of Saudi Arabia.
All right, very good, Taylor. Now let's get to this news. The company with a press release today talking about the fact that you've received an indication from the Export-Import Bank of the U.S. for up to $825 million in debt financing, a significant number, obviously potentially a huge milestone here. So can you give us some more details?
Sure. So the press release actually came out yesterday, not to mince the details, but it came out yesterday morning. And yesterday's announcement is really the culmination of a lot of hours and a lot of meetings in Washington with key government agencies, including the U.S. Export-Import Bank. And we're very pleased with this announcement. As most of you all have probably seen, the Trump administration is very serious about increasing domestic supply of critical metals, and it's evidenced by the recent executive orders. There was a March 20th executive order to increase critical mineral production in the U.S., and then recently, yesterday, another executive order that came out talking about the need to increase critical metal production and processing and derivative projects. So we're very encouraged by the current administration's, very intense focus on increasing domestic supply. And yesterday's announcement by the U.S. Export-Import Bank and our receipt of the letter of interest is a powerful endorsement for our project. It's a clear example of the U.S. government's support for domestic projects, and we couldn't be more proud of working with the U.S. Export-Import Bank. And yesterday's indication of their interest in providing key debt financing for our projects, very important milestone for our project.
It makes sense. The news release went out yesterday, hence the pop in the stock. Got a big lift on that. So congratulations on that news. Taylor, as far as Santa Cruz, can you expand on the timeline to the feasibility study?
Yeah, so there's a couple key things to point out. We're on track to deliver our project preliminary feasibility study in June of this year. And as a U.S. company, under our regulations, which is SK 1300, that's analogous to the Canadian National Instrument 43101, our preliminary feasibility study will be the final study for this project. And that study is due to come out in June. That will be the final study for our project. That is the study that we will use to support all of our project financing efforts. And we are on track and on budget to deliver that study in just a couple short months. And it's important to note that, that keeps us on track to advance our permitting process and to enter 2026. And, we anticipate being on track to commence first construction of this project in the first half of 2026 on the back of this study. In fact, we will concurrently file a feasibility study under 43101 with this PFS. So we're very excited to have, in the context of yesterday's announcement, and in the context of the U.S. focus on production of domestic copper, what we feel like is a very unique project. We're a U.S. company with a project located in the U.S. on private land in Arizona. The project has the capability to produce pure copper cathode on site. And as I mentioned, we're very near shovel ready with the completion of this PFS. So we've got an advanced stage project that's ripe to help meet domestic supply for copper and to support domestic supply chain security.
You're also continuing to explore, to expand the resource, and you've got some key targets at Tintic. And you say the geology is quite similar to Rio Tinto's Bingham Canyon mine to the south. Could you elaborate on that?
Yes, Tintic is one of our key exploration projects in the United States. We're actively exploring at Tintic. We're actively exploring in Hog Heaven in Montana. We're also actively exploring other areas in the Southwest. We're currently involved with active exploration surveys with our partner BHP here in Arizona. So Tintic is one of our exciting exploration opportunities, but it's just one of the many assets where we're active deploying our industry-leading and proprietary technology to find new sources of critical minerals. So, we've got additional exploration upside at Santa Cruz here in Arizona, and many high-quality projects to explore for new sources of critical metals.
And can you tell us, Taylor, about the recent volatility that we're seeing in the financial markets, all the uncertainty, all the turbulence? Is it directly impacting your ability to make decisions, or is it business as usual, or somewhere in between that?
The current market is certainly, I'd say it's distracting. I mean, the near-term volatility that Taylor talked about in his presentation earlier is certainly a big part of our market. But mining is a long-term game, as you well know, and these are large projects that require large amounts of studies and engineering and capital to bring online, and in that context, you really have to take a long-term view. And despite the short-term volatility and the short-term uncertainty created by some of the trade policies that are being talked about and tariffs, et cetera, and while that certainly is a benefit to the U.S. copper price relative to the rest of the world, we're very constructive on the long-term view for copper. We're very constructive on the long-term view for copper in the United States, and we're very bullish on the view of our own copper project at Santa Cruz. It really is, as I mentioned, a unique project. It's high grade copper, underground copper, limited surface footprint. We're going to employ modern mining technologies to bring this copper to the surface. We've got the ability to produce pure copper cathode on site that won't require going offshore for smelting in a very tight domestic smelting market in the U.S. Despite the near-term volatility, we're very, very excited and very bullish on the long-term fundamentals, and we're perfectly positioned to benefit from the current administration's policies to support domestic mining. So for those interested in U.S. copper growth, we're in a great position.
Well, thank you very much, Taylor. We appreciate it, and we'll see you on the panel later.
That sounds great. Thanks for the time, Mark. I appreciate being here with you all today.
Taylor Melvin, CEO of Ivanhoe Electric. Amazing news there in terms of that arrangement, a potential arrangement with the Export-Import Bank of the United States. We're talking big numbers, just under $1 billion. Let's bring in Ian Graham, president of Oroco Resources. Good to see you again, Ian. Thanks for joining us.
Thanks for having us, Mark. Good to see you again.
Right. We talked quite recently at pre-PDAC Red Cloud's conference just a while ago. Let's call it 5-6 weeks ago. So for those who may not have seen that interview, can you give us a brief snapshot of the company's main asset, Santo Tomas, in Mexico, the big copper project. You got a PEA with a robust economics.
Indeed. And so in Northwest Mexico, we have the Santo Tomas project, which comprises 8.5 billion pounds of in situ copper in a resource that is mixed, indicated 4.5 billion pounds, and the balance in inferred. So a sizable resource and a plus $25 billion in situ mineable resource based on our last year PEA that we put out, worth about $25 billion. So an exceptional project, but the really compelling aspects of the project as we see it is that the great infrastructure, low elevation, easy, ready access to the project permits a very cost-effective build. And so this project has very compelling capital costs and capital efficiency in terms of its development potential. And so a $1.5 billion build takes you to $1 billion a year revenue stream at $4 copper. Very straightforward metallurgical process, and a very compelling project all around. So we're thrilled with that. And in particular, we believe our PEA work was done to a high standard, but particularly directed by our CEO, Richard Locke. And Richard has a record of on-time, on-budget builds for the likes of Rio Tinto and other major mine and oil and gas plant developers. So, you know, I think what we have in Santo Tomas is a very ready and build project, and just really compelling. So, you know, as far as we're concerned, it's one of the best and most buildable copper projects in the Americas. Mark, you're muted.
Sorry about that. I was just saying I misspoke off the top, but you're the president, and Richard, of course, is the CEO of Oroco Resources. Now, I understand that the team has been having meetings at the federal level, at the state level as well in Mexico. And the word coming out is that you now have a clear pathway for the Santo Tomas project. So can you elaborate on what you've achieved with these talks?
Absolutely. In the period since you and I spoke, I believe we've had a sea change in terms of the sort of reversal from perhaps some headwinds in the permitting environment in Mexico to distinct tailwinds. And what that really followed from was meetings with a sitting congressman, a guy called Mario Zamora, who came to Vancouver, spent a couple of days with us, and really understood the project. And most of all, he was impressed with our social program and the integration we've had into the community down here. Certainly, my wife and I lived here for a couple of years through COVID. And we have phenomenal partners here on the ground in Koryx. And so Mario felt that the Santo Tomas project is absolutely the vehicle by which to integrate with the community and meet many of the rural community development aims and economic stability aims that the state of Sinaloa has for northern Sinaloa. So he brought us to a number of his colleagues in Mexico City, but in particular, the Undersecretary for the Economy, responsible for foreign direct investment into Mexico. And so in Mexico City, some 3 weeks ago, we had excellent meetings, followed by technical meetings that introduced us to all of those who would support us technically in the future permitting of Santo Tomas. So we have to follow the usual path of baseline studies, EIAs, etc. But we now have the full endorsement of the federal and state governments. And the last meeting we had was with the governor here in Mexico. And what's really compelling for us is all of the politicians that have given us their assurances of support have simultaneously news released those those assurances and put them out on X, LinkedIn, Facebook, etc. So it's widely publicized in the print media, etc. And we're seeing support from across the board here in Mexico. So we're absolutely thrilled, Mark. There is absolutely no doubt now that we should take this project forward in an expeditious manner.
All right, very good. Speaking of moving forward, Ian, what can you tell us about phase 2 drilling as you move toward a pre-feasibility study?
Certainly. So we're now at that stage where we have to start to accelerate our next steps. We're focused initially on environmental work. We're actually getting baseline, etc. going. I'm down at the project currently. I'm coming to you from the core shack. And yeah, we're just getting ready to accelerate that. And then we'll follow that with drill programs, which are essentially focused on the south zone and elevating the resource in the south zone to an indicated status. And that would allow us to regenerate a higher category mineral resource estimate that could underpin studies such as pre-feasibility, etc., as is appropriate. So we're excited. I mean, certainly we feel the wind at our backs and the ability now to plan and move forward as rapidly as possible.
Ian, one of the themes of this live copper showcase that we're doing right now, as you know, is all the uncertainty created by the White House, all the back and forth on tariffs and so on. And we're wondering, is it affecting your business in any way, especially in terms of being able to make investments, make business decisions, or is it business as usual and the story is kind of separated from the news flow of the day?
Great question, Mark. Our view actually is that we're in a moment where there's some focus on resources. We take a long-term view, similar to your previous guest Taylor's comments, and about keeping that high-level and long-run view. That we take that view, but we see an environment where there's focus on copper, and we want to play into that and develop for North America an opportunity to develop a very significant copper resource. Our current plans for Santo Tomas envision 110,000 ton a year of copper and copper equivalent flows, and the project's expandable off that. So very meaningful project that should be brought forward as quickly as possible.
Thank you for your time at this moment, Ian. We appreciate it, illuminating us on your project in Mexico, and we'll see you on the panel in a while.
I'm going to be replaced because I'm doing the webinar, and so you're going to meet Richard Locke, and Richard will do the Q&A with you, Mark. Yeah, thank you for having me, and it's great to see you again. Cheers.
Okay, good to see you. Maybe a little early onset for me there. I just confirmed that with my producer, Nicole Sienna, that indeed we will have the CEO on at the end of the show for the panel, Mr. Richard Locke. We'll get to him in a while. Now, let's move along to George Ogilvie. He's President and CEO of Arizona Sonoran Copper. Hi there, sir. How are you doing, George?
Well, thank you, Mark. Thank you.
All right, so I'm doing this with everybody, again, for context for our viewers. So if they're not familiar with the story of the various companies, then you can provide that for us. But you've got this low-risk, low-cost Cactus mine in Arizona. You've got a preliminary economic assessment on it, and the estimate is for projecting a 31-year life of mine. So again, a brief overview, if you could.
Yeah, look, this is a former producing mine that was in production in the 1970s and closed in 1984. It was formerly owned by Oroco. We were able to pick the asset up from a state environmental trust in late 2019 by paying $6 million to the Arizona State Department. And since then, we've been conducting drilling on the site, various technical studies, moving it through the permitting. And all of that culminated last year with a preliminary economic assessment that we put out, We used a $3.90 copper price flat throughout the model, and it gave us an NPV8 after tax of $2 billion US, an IRR after tax of 24%, and we generated over $7 billion in free cash flow over a 31-year mine life. And what's very important is that over the first 20 years of the mine life, we generated 100,000 metric tons of copper cathode production annually in the first 20 years. So extremely robust production numbers. Our all-in sustaining costs were $2 a pound of copper. So, you know, despite the volatility in the copper price, we expect this mine to make have significant margins. And I think what differentiates this project from some of the others out there, it's extremely low risk. It's in a very safe jurisdiction, being in Arizona. It's all on private land. It comes with water rights to the year 2070. We have access to roads, power, rail. There's even a community on our doorstep that gives us a very strong social license. We won't have to build camps. And we're quite literally a 1-hour drive south of Phoenix that has a population base of 4.5 million people in the greater area. So you couldn't really ask for a copper project in a better jurisdiction.
Now, George, the company is planning a pre-feasibility study later on this year, sometime in the second half. Can you take us through that timeline and the work that needs to be done leading up to that?
Yep. So today we have 11 billion pounds of copper in our resource. 7.5 billion pounds of that is already in the M&I category. But there's 3.5 billion pounds of inferred material, principally sitting at Park Salyer in the southern portion of that deposit. And given that that will form the basis really of our first 10 years of open pit mining, we need to drill that inferred resource out at least into the indicated category ahead of the PFS in the second half of this year. So we have 4 drills currently drilling at site, 3 of them allocated to Park Salyer for that infill drilling. Other work that is ongoing is metallurgical columns. We have 12 columns up and running 4 months already. Those are due to be completed sometime by the end of May. And again, those would feed into that pre-feasibility study later in the second half of this year. We would anticipate, with the drilling completed in early June, that we should come out with a mineral resource estimate update. The resource is only marginally going to grow above the 11 billion pounds. But what we really want to see, as I said earlier, is see that inferred material move from the 3.5 billion up into the M&I category. And then just as importantly, we have drilled hydrological holes and metallurgical geotechnical holes around the site. Obviously, that's going to give us further indication of the water that we have on the property, and also for the pit design as far as the slope angles and the height of the benches is concerned. And all of that will culminate, as we said, in a PFS in the second half of this year.
Now, let me ask you, George, a question I've been asking to our previous guests, and I'll ask of all of them. The tariff situation, the uncertainty that has created, is it directly impacting your business, or do the tailwinds in the copper sector and the need for critical minerals and copper in the United States, is that superseding any of this turbulence?
Yeah, look, it's a great question, and as per the 2 other, respondents, tariffs really don't affect our business. So in a nutshell, no. Like the other respondents, we take a very medium and long-term view on our business model. We think the fundamentals for copper remain extremely strong. We know there's going to be continued pressure on supply deficits. And if you think about the demand fundamentals of how those will grow exponentially in the next couple of decades as we move towards more green energy, we think that there's going to be a supply or demand deficit with respect to copper. For the US specifically, Mark, there's 1.2 million tons of refined copper required annually. 600,000 to 700,000 tons of that comes from local supply. but 500,000 to 600,000 tons today is actually imported into the country. So if tariffs are coming in place, certainly those producers or near-term producers like ourselves who can produce copper cathode that can be sold right into the US domestic supply for manufacturing, I think are going to do extremely well here in the ensuing years.
Now, lastly here, if you could wrap this up in terms of the investment case for the company. We know that the Hudbay is a significant shareholder. Newton, which is owned by Rio Tinto and has that cool newfangled technology, is also a shareholder. So what is your, and the stock has held up pretty well in the last while, as you know, what is your impression of the market's impression of your company's story?
Well, I think looking at the share price performance, as you alluded to, I think it's been extremely good. Hudbay conducted 4 months of due diligence within our data room, access to management. Ultimately, they decided to put an investment of 20 million Canadian dollars into the company in January. That was actually done at a 15% premium to the 5-day VWAP price. So the offer price was $1.68. And just in the last 2 weeks before Trump announced the tariffs, we actually hit $2.52. I think today we're trading around $2.05, but that's still a 24% uplift from where Hudbay put money into the company quite literally 3 months ago. And then, you know, over the last 2 to 3 years with Rio Tinto investing in the company at Topco through Newton, every time we've raised money, they've always exercised their preemptive rights and continued to put, investment into the company. So I think that's a great check mark of validation and credibility for the project and the management team. And I think the market supports that based on the performance of the share price in the last 3 to 4 months.
All right, very good, George. Thank you very much. And we'll talk to you on the panel in a while.
Thank you, Mark.
George Ogilvie, President and CEO at Arizona Sonoran Copper. We're going to move along now to Foran Mining. VP of Capital Markets and External Affairs is Jonathan French, and he is joining us now. Good to see you as always, Jonathan. How are you, sir?
Great, Mark. Yourself?
Good, thank you. We're rolling along here, and we want to know, again, as a table setter for your company, we've talked before about the big McIlvenna Bay project in Saskatchewan. You've got initial production expected later on this year. Can you give us a brief update?
Yeah, exactly. Thank you, and thank you, Red Cloud, for hosting this event here. From our perspective, it's really exciting what we're trying to develop here. We are the only hard rock copper mine developer in production or in construction, in North America. So it's really rare spot that we find ourselves in with production later this year and commercial production, more importantly, in the first half of 2026. So construction at the end of the Q4 was around 24% complete. We'll be providing a construction update in the coming weeks on what it was like at the end of March, but really we're progressing through that development phase and looking forward to being in production in the first half of next year, or commercial production in the first half of next year.
All right, getting closer by the minute. Very good. Now, Jonathan, we've talked before about how the team at Foran is trying to get a better understanding of the connection between McIlvenna Bay with the Tesla zone and incorporating the bridge zone as well. And can you give us an update on the further understanding of what you have there, because you think you may be on something, sitting on something quite large.
Yes, that's exactly correct, Mark. So the unique thing with Foran is not only are we developing this asset, but we're continuing our exploration strategy to uncover and expand our known resources and expansion potentials at the mine. So under the initial phase that we're currently building, it's a 4,900 ton a day operation, and that's focused solely on McIlvenna Bay, which is about a 44 million ton resource. About 300 meters away over the last 2 years, we've uncovered the Tesla zone, which is showing opportunities of potentially 28 to 45 million tons of total resources. So we're looking at including that into a broader mine plan that once we get the initial phase into commercial production, we look to expand throughput, expand our production as we grow this asset into something that can be sizable for the Canadian landscape.
Now, on the financing side, the company in recent weeks and months has signed some agreements with two federal funds in Canada for more than $60 million in funding. What can you tell us about the kind of support you're getting?
Yeah, it's been great to see the support from the federal government. So the two funds you're mentioning are the Sustainable Innovation Fund, where we received up to $41 million, and then the Critical Minerals Infrastructure Fund for our transmission line to a renewable hydropower plant for about $20 million. So it's nice to see government initiatives start to allocate capital to a substantial portion of those upstream investments that really need it, not focusing directly on the battery electric vehicle plants or battery facilities that we've seen kind of hit the headlines over the last year and a half. So it's nice to see money start to flow through. And the big opportunity here as well is in our discussions federally, you get broad support for the critical mineral space, whether you're a liberal or conservative supporter. So that from that perspective, it's great to see. I think what we need to continue to see is additional capital flow to other assets and other companies within Canada, because we really do have such a great advantage in Canada having the mineral endowments that we do. It's just a matter of being able to capitalize and grow and start construction of these assets, and federal support is critical in making that happen.
Jonathan, we just heard from George over at Arizona Sonoran. He says all this tariff uncertainty not really affecting his company. What about Foran Mining? You guys are in Canada, obviously. So the uncertainty, is it impacting your business or not?
Thankfully not. From our perspective, all our long lead time items have been secured and placed, as well as majority of our capital has been allocated. So from a pricing perspective, there's no impact in tariffs. I think to echo the previous individuals as well as George, is it really longer term, we don't view it as a material impact, and more on the near term, and apologies if George mentioned it too, but when you look at obviously primary copper production, which is about 75% of global production, there's the secondary or the scrap component of copper production, which is about 25%. And US is actually the largest exporter of copper scrap to China. And with these broader tariff appeals, we could potentially see a medium-term or near-term impact on some of these flows on the supply side. So I think while they're, from our perspective and I think a broader market perspective, there's some uncertainty. I think there are a lot of constructive opportunities we're seeing on the scrap and overall supply markets.
Lastly, Jonathan, Foran Mining has significant stakeholders in Fairfax, Agnico, Sprott as well. Can you summarize your thoughts? I'll throw you a softball here. Just give us the 30, 45-second pitch, if you could, for your company.
Yeah, so from our perspective, having these long-term shareholders really provides support in what we're trying to build here. We're not looking for investors that want to invest in the short term. It's really about getting this asset into production and getting the expansions underway. I think with the recent market activity we've seen, Foran, it hasn't traded at these levels since December 2022. And before that, or at that time, we didn't have our environmental permits. We didn't have our collaboration agreement with the Peter Ballantyne Cree Nation. We didn't understand Tesla and how big it could become. We didn't have Agnico as a flagship shareholder as well. So there's been a lot of de-risking events that have happened and transpired since then, which provide a lot of upside opportunities for investors. And then I would just lastly say that we're hitting that re-rate opportunity, building from a developer to a producer. And historically, you've seen companies that have done this, G Mining Services, Artemis, Lundin Gold, where they've gone up 60 to 100% in those months leading up to commercial production. So a lot of catalysts coming forward on that, as well as the exploration side, and just really a great opportunity in the space.
All right, very good, Jonathan. Informative and concise. We appreciate it. We'll see you on the panel in a while.
Thank you, Mark.
Okay, Jonathan French from Foran Mining. We've got a good pace going here, and we're covering a lot of ground with these companies. It's really interesting. Hope you're enjoying it. Let's bring in Trevor Faber now. He is the Chief Operating Officer at Koryx Copper. Hi, Trevor. Thanks for being with us.
Good day, Mark. Lovely to be with you, and thank you for hosting me.
Absolutely. We're glad you're here. We've talked to Koryx on many occasions. You've got this big high tonnage project in Namibia, HABE, which the company is fast tracking to a pre-feasibility study by the end of this year. What can you tell us at this moment?
That's right, Mark. The HABE project is a very large and well advanced open pit copper moly porphyry deposit. This project has a long history of exploration. It was has been explored extensively since the 1960s by some of the major names in the copper industry. And over that period of time, about 80,000 meters of diamond drilling has taken place. The overall result of that diamond drilling work and exploration work that's been conducted is a mineral resource estimate of 760 million tons at a grade of 0.35% of copper, which gives us 5.5 billion pounds of copper contained, and that's above a cutoff grade of 0.25% copper. So if you compare us to some of the other copper projects out there, 5.5 billion pounds of copper in the ground places us in the top 10 of the undeveloped tier 2 copper deposits in the world, Mark.
Now, you mentioned drilling. You've got quite a program underway, multi-phase, 55,000 meters of drilling expected, and you've got multiple rigs involved as well. Can you elaborate on that?
That's right. So we've broken our drilling down into 3 phases. Phase 1, which we are currently engaged in, we've got 4 drill rigs on site, and that is a 10,000 meter program. And the aim of phase 1 is really to delineate some higher grade geological structures that were identified by those previous operators and extend across the strike extent of this project. They take the form of hydrothermal breccia pipes and of shear zones. And what we're aiming to do in phase 1 is really to better understand the geometry of these higher grade zones and down to depths of about 400 meters below surface. These are the rigs that were available in Namibia at the time, available to drill to limited depths in the very rugged terrain that we're in. And we hope through this program to be able to increase our grades to around about the 0.4% copper contained grades. Then moving on from phase 1, which will be completed towards the end of April, maybe early in May, we move into phase 2. And during phase 2, we will mobilize another 6 drill rigs. So this is really when drilling starts in earnest. So we'll have a total of 10 drill rigs on site. And the objective of phase 2 is really twofold. Is first of all, we'd like to increase the size of the mineral resource estimate. The mineral resource extends below the 400 meters below surface that I was mentioned previously. We've drilled it down to 700 meters previously, and we would like to push some holes down and see if it extends down to 1,000 meters below surface. And we believe there's no reason that it shouldn't extend that deep. So there'll be 20,000 meters allocated to resource extension at depth and along strike. And we're also going to do a further 5,000 meters of engineering drilling, Mark. And that really will be for pit wall geotechnical stability studies and a little bit of geotechnical data collection for our foundations of our mills, crushers, all the dynamic loads that are required in the process plant. So that's phase 1 and 2 described, and then on to phase 3, which is a further 20,000 meters of infill drilling. We'll keep going with those 10 drill rigs, and we'll narrow up the drill spacing from 150 by 150 meters down to a 75 by 75 meter spacing. So really improve on the confidence levels in that resource estimate. So an awful lot of work to be done, but we're well set up to go ahead with that.
All right, Trevor, I believe you touched on it a little bit, but if you could flesh it out some more, just in terms of the timeline to construction. You're planning a PEA by the end of this quarter, and then onto a PFS, and then a definitive feasibility study, and then construction. Can you sort of break that down for us?
Yeah, certainly. So we've engaged very well-renowned international experts to help us prepare the PEA in terms of doing mine designs, process flow sheets, We're doing environmental, infrastructural studies. All of those processes are being followed. And what's important, I think, to point out is that we've reverted to a very much more conventional and lower risk metallurgical process flow sheet. There was a previous PEA issued on this project, which considered a heap leach operation. We feel that has some merit to it, but that there needs to be further metallurgical test work done and maturity in that technology before we can employ it for our own purposes. So the PEA we are doing, Mark, and the PFS and DFS will be based on a very low risk conventional crush mill float operation. We're talking large scale here. We're talking something like 20 to 30 million tons per annum. So the PEA considers a range of operational scales, ranging from 20 to 30 million tons per annum, which would produce approximately 70 to 100,000 tons per annum of copper in a very, very high grade concentrate. So it's a copper in concentrate and a very good quality copper concentrate. As you pointed out, that'll be completed in June. We feel that the maturity of the engineering and the test work that we've done is relatively well advanced, and on completion of the PEA, that'll allow us just to move into the PFS relatively seamlessly. That PFS we aim to complete by Q1 of next year, so that's 2026. We'll then take a deep breath, assess the results of that PFS, and make a decision as to whether to proceed on to the DFS, which we anticipate being in Q2 of 2026. And we would aim to complete that DFS in Q1 2027. Again, we're not trying to do anything incredibly different or fancy here. We're just going for a very low risk and well-proven process route and technology. I think it's important to point out to the viewers and the listeners out there that the mining and environmental permitting process in Namibia is very predictable and well understood by the Koryx team. The Koryx team, you will recall, was instrumental in developing and licensing the Osino Twin Hills project in Namibia. And that process took them about 2 years to get the environmental permits and mining permits in place. So we plan to commence that process in Q3 of 2025, or immediately following the finalization of our PEA, and that should take 2 years. And if that does take 2 years, as we anticipate it will, we would be ready to move into a construction phase in 2027. So I think that kind of puts it into perspective for the folks out there.
Right, and in one sense, that's kind of right around the corner. It'll be here in no time. So thanks for doing that for us. Now, you mentioned Namibia. That's where your big mine is and where you're operating. I'll ask you the same question of all this uncertainty and volatility in financial markets. Is it impinging on your business in any way and your ability to make investments and decisions, or not really?
Not really, Mark. You know, we're fortunate to be cashed up. We raised enough money last year from our shareholders, and we have some excellent shareholders on our register. And that money will allow us to continue the work to the PFS stage. So that's through to the end of 2025. There will obviously be a need for some finance to take us through to the DFS phase. And we are considering our medium-term options in due course.
Very good, Trevor. Thanks for your time, and we'll see you on the panel shortly.
Thank you.
Trevor Faber, he is Chief Operating Officer at Koryx Copper. Next up is Sam Lee, President and CEO of NorthIsle Copper and Gold. Great to see you, Sam, as always.
Hi, Mark. Good to see you again as well. Thanks for having me on.
Thanks for being with us. Let's get a table setter from you and some context on the company's project on the company's North Island project on Vancouver Island that you are developing. You've got a recently updated preliminary economic assessment.
Yeah, indeed. And what that preliminary economic assessment is showing is that this is one of the largest, highest return, lowest capital intensive copper and gold projects on the planet that's not currently owned by a major. And these are the numbers that we're showing. We just released the PEA and the technical 43101 report a couple of days ago. At analyst consensus, very conservative pricing. It's a $2 billion after-tax net present value. At spot, it's closer to $4 billion, and spot being about a $2,900 gold price. Gold price today is about $3,300. And after-tax IRR based on analyst consensus of 29%, and second to none, off the charts capital intensity. So this project, as defined, is really a copper and gold, copper almost equally distributed over that 29-year mine life, but we've broken it up into two phases. The first phase, which is effectively a 40,000 ton per day, so we've cut it the throughput in half, is actually a gold project. It's about 200,000 ounces of gold a year and about 50 billion pounds of copper a year for those first 5 years. And then it goes to approximately an equal distribution, copper and gold, for the remaining 24 years. So if you want to think of this as a gold project, it's about a 300,000 ounce per year gold equivalent. If you want to think of this as a copper project, it's about 157 million pounds of copper a year. And so when we run these NPVs, we run it at a very conservative 7% because it is a little bit of a mix between copper and gold. Most gold companies, as you know, run their NPVs at 5%, which makes us wildly accretive. If we run, for example, spot prices scenario at 5% NPV, this is close to a $5 billion after-tax net present value at $2,900 gold. So wildly sensitive to gold. This is what separates us from our peers. We do not see this in any other project that currently isn't owned by a major on the planet. The second thing is it's right next to Tidewater, right? So we'll talk about it, I'm sure, over the course of this interview. But there is a very strong political movement that's happening in Canada and the U.S. that makes it essential to create economic independence, certainly in Canada. And because this project is right situated on Tidewater, there does not need to be any additional infrastructure that needs to be built. It's in an area where there was a BHP mine that was mined out for 24 years. Hundreds of millions of dollars were spent on infrastructure for this area for pretty much the similar size project. So we are absolutely blessed to be in this neck of the woods, especially given the huge amount of political will among locals, First Nations, provincial, federal levels. And then, of course, lastly, and probably most importantly, we really are second to none with respect to our leadership, our board and management. For a junior company, it is remarkable to have two mining Hall of Famers on our board. We've just announced that Alex Davidson, who is, everyone knows who he is. He's worked many decades with Barrick as our executive vice president of exploration. He knows pretty much every gold project on this planet, and he has an extreme influence in the industry. But more importantly, he lives on Vancouver Island, so he understands what it is to build a huge project and what is needed as it relates to this consent-driven approach that we've taken. And he has emphatically and publicly stated that this is an area that is waving us in for this type of project. And that I think it really needs to be heard by the market, because this is a gentleman who not only understands explicitly what needs to be done for projects like this, but a man who also lives in, and has this project in his backyard. And then lastly, we've just also announced Dr. Pablo Maheo. I think Taylor Melvin spoke to it before, but this business of exploration, it is becoming data-driven, right? The more data you have, the more you can synthesize and really triangulate and target and vector into the areas that we want. We have a 50-kilometer porphyry district that has been explored for 60 years. There have been multiple geological surveys, and past producers and past explorers and current producers and current explorers that have culminated into this this incredible amount of data, which just becomes more and more useful when you have someone like Dr. Mejio to synthesize this data. So we are have initiated and started drilling on our 2025 program, and really look forward to getting to it as quickly as possible.
Right. Key targets include Northwest Expo and West Goodspeed. And to use your words, Sam, you said that there's a potential here for a generational district scale resource. Can you maybe flesh that out a bit for us?
Yeah, absolutely. And a lot of that is what I've just described as it relates to this data-driven work. We don't show the slide here, but if I could show you all the surface samplings and the geophysics and the drilling and the mapping that's happened over the 60 years across this 100% owned district that we have, starting at the Island Copper Mine, everyone would understand why I'm so enthusiastic about this. But for now, the $10 million that we just raised in December is going to focus on this high margin, high return Northern Corridor area that has now been identified through this preliminary economic assessment as being approximately 65 to 70% EBITDA margin. So that is what is creating this incredible opportunity around low capital intensity, high returns, and significant exposure to commodity prices, because it's predominantly gold. So that's Northwest Expo and Red Dog. The really interesting part about this is, as you can see on the map, West Goodspeed, which is something that is not in our resource and is not in our PEA, but it's only about 150 meters away from the Northern Corridor defined MRE. That is not included, and we already have 16 holes that we released last year. We discovered it last year, and these holes yield very similar grades, equivalent grades, and potentially similar NSR values and margins as this phase one 65% EBITDA margin area. That's why we're focusing right now, because we know the material, meaningful impact that this project has if we actually find more of this higher margin zone that is currently only about 150 meters away from the defined project phase one. So that's something we're going to focus on. There is some really high grade zones in Northwest Expo that we've been looking for, this causative intrusion that gives us this 1 to 2 grams per ton in the pit shell at Northwest Expo at surface area, and we believe that it's migrating and been displaced to the north, the northeast of the pit shell, the current pit shell. So that's going to be the second part of it. So exploration, step out, infill drilling around West Goodspeed, which we will be looking to develop an internal resource after this program, which we anticipate having a material and meaningful effect in this high-grade zone, Northern Corridor. And then lastly, in terms of Pemberton Hills, to your question on how do we open up the district, well, that answer could be answered through Pemberton Hills, which you could see is approximately 7 kilometers away. But this is where the big, deep, buried porphyry may exist that resides under the 6.5 kilometer by 1.5 kilometer lithic gap. So the size of the system already is showing that this could be, system size perspective, the size of a Batihiju or Las Palambras. Like, this is a very large system. It's pre-discovery, and we are faithfully looking to advance this through partnerships as quickly as possible.
Now, lastly, Sam, before we get to the panel, we'll bring everybody back along with you in just a second. But this sentiment you're describing in Canada, this drive to secure our own natural resources, is that overriding any uncertainty that may be impacting the company because of this off-on tariff situation?
Yeah, look, it's a really good question. My take on this, and it is coming into fruition here, is that this political environment was waiting in Canada, was waiting for the very obvious solution that in order to create economic independence and economic wealth for the country, we cannot ignore natural resource extraction, right? So the tariff threat and the rhetoric that's been going back and forth has only empowered the provincial, federal governments to to come out and to be confident to express this support now publicly to all its constituents. So a very good example of that is that we have now a federal election coming up, snap election coming up in the next couple of weeks. And both major parties, Liberals and Conservatives, are expressing the exact same desire to expedite these types of projects, right? The BC government has already identified 4 projects in British Columbia, mining projects in British Columbia, that they will be expediting. So everyone is aligned in terms of what needs to be done in the country, and we're starting to see action as Jonathan referred to in some of the funding support that the government is giving right now. Now, the key things about our project, which makes it even more incredibly appealing to the government, is there is already that sunk infrastructure cost that was spent back in the 70s for the Island Copper Mine. We are literally 20 kilometers away and have the ability to utilize most of that infrastructure. So the government doesn't have to spend billions and billions of dollars to build out infrastructure in our area to access its customers, which in our case would be global in nature, given the fact that we are on tidewater. And secondly, and probably as important, if not more important, is that we have now developed a very novel approach around consent-based decisions with First Nations groups, effectively identifying them as being governments that we go to first before we actually go through the provincial process, right? Which is exceedingly important when it comes to expediting and truncating and contracting these timelines. And I'm happy to say we have established consent agreements with our First Nation groups, which has now allowed us to expedite our permits, the multi-year asset-based permits. So these are not exploitation permits, but these are exploration permits that allow us to access and drill and clear the land. We have consent agreements with 2 of those First Nation groups. So this is fundamentally something that really falls within our sweet spot, because the tailwinds that this alignment that we're seeing politically only supports what we're trying to establish at NorthIsle.
Great stuff, Sam. Very thorough. Thank you for the slides as well. That was nice to see visually what you're talking about. So stick around because you're on the panel here. As you know, we're going to reintroduce our guests. We have a couple of new names here. Arizona Sonoran Copper. We're joined by Nicholas Nikolakakis. He is the VP of Finance and the CFO. And we're also bringing back from Ivanhoe Electric, Taylor Melvin, CEO. We've got Richard Locke joining us now from Oroco Resources. Jonathan French comes back from Foran Mining. Sam Lee is still here from NorthIsle Copper and Gold. And then we've got Trevor Faber on the panel as well. Kind of a Brady Bunch thing, almost. We tried. Anyway, all right. So, gentlemen, we're going to try to go probably 15 to 20 minutes. We do have 6 of you, so we want to be mindful of time. And if you could keep your answers to a reasonable length, and feel free if you want to jump in and follow up somebody's answer, that's perfectly fine. But let's just kick things off here. We'll start with Nicholas from Arizona Sonoran Copper. He's new on the panel. Why don't we start with you, Nicholas? Thanks for joining us. And I want to ask you, and I'll ask each of our guests a similar question. We can bat it around, but not so much. I don't want to focus so much on the tariffs, but the economic headwinds that seem to be resulting from that, and just the general uncertainty globally. What are the challenges, if any, to your company right now in terms of executing on your strategy?
Well, thanks for having me, Mike. In our particular case, we're in the process of developing a preliminary feasibility study. So with respect to our project, it has extremely robust economics, and the tariff situation really doesn't have an immediate impact on our organization, given where we are with respect to our stage of development. We're in the process of producing a copper mine in Arizona, and are currently looking for opportunities to find a home for that copper locally as well. So we're in the early stages of this process. There may be a longer term impact, but certainly no immediate term impact for Arizona Sonoran at the current time.
All right, who wants to jump in? How about, sorry, go ahead. I was going to say, Richard Locke. Do you want to take it from there?
Sure. Yeah. I mean, all of us, mining is a very long-term business, and I think the current flux of tariff talk going to be long settled. These operations are all going to go for multiple decades, and the world needs copper, and the world will figure itself out how that gets done. So I think we need to adapt in the short term as the tariffs come and go, but long term doesn't affect it. The world needs copper.
All right, who wants to jump in?
I could jump in. Look, I mean, obviously this volatility is not good for markets, and we are constantly trying to raise money to develop our projects, which is going to have a negative impact on all of us. But, I think that is really also key to understand that as we all develop our projects, these projects going through the de-risking process has, unless we have an upward trending market, has risk of contracting, right? In terms of economics, de-risking usually does not mean that you're going to expand the potential of a project, which is why at NorthIsle, we are very focused on ensuring that we have both our levers working in terms of our exploration, supplementing our project de-risking, right? So we're starting with a bigger project right now. We're focusing on that northern corridor that is already showing a much higher margin. And if we can expand that northern corridor, we don't have to go back to stage one around defining a PEA around it. We could just continually move on to PFS, a feasibility study with a much more higher margin portion of the project. So that's how we're combating this potential risk of going through the de-risking stage in an environment, a market environment that's kind of going sideways right now due to the volatility that we're seeing.
I think Sam is right, and he hit the nail on the head when he talks about risk. Maybe it's both of our investment banking backgrounds. But risk is a key variable in the mining industry, and as you look at projects, and it's important to de-risk assets as much as you can. The way you do that, some you can control and some you can't control. The things you can't control are jurisdiction. So it's great to have projects in places like Arizona, and a state that's produced about 10% of the world's copper. It's great to have an asset on private land, and it's great to have high-grade copper. So our 4.7 million tons that contain copper have an average grade of 1.24% copper. So while that may not be great compared to Robert's assets in the Congo that have got 4.5% copper, in the U.S. that's actually quite high grade. And that allows us to have a capital intensity that's a fraction of what you're seeing in greenfield and brownfield projects in North America and South America for that matter. So I think really talking about risk, when you talk to investors, we all feel very good. Everybody on this call feels great about the long-term fundamentals of the copper business, and copper is a key component of, in any definition of critical metals, copper is the top of that list. You need copper for all electricity infrastructure. You need copper to replenish the military supplies in the U.S. You need copper to build data centers. Everything that we talk about in our global economy requires more copper. So to have a project that is potentially within 12 months of initial construction, that timetable allows us to control that aspect of risk. So we've spent a little over $100 million on the studies for our project in Arizona. We recently raised about $70 million in the markets in a very tough environment in February. We're fortunate to have large shareholders like BlackRock, T. Rowe Price, Robert Friedland, Sailing Stone. Modern is a 9.9% shareholder of our company. So high quality group of investors, high quality project. And it really is about mitigating that risk through detailed studies, our floors, our project lead. And so I think as we look out, all of us want to have high quality projects to supply metals to the markets that need it, and we're all doing what we can to control that risk profile.
Any other commentary from?
Maybe I'll just add something quickly here. I think the other thing to kind of focus on, I think, is just the recent volatility we've seen is just the value opportunities that have opened up. It really reminds me back in the COVID days when everyone sold everything and didn't really care about what was happening. But it provided substantial performance opportunities for portfolio managers and investors alike. Mining is such a unique and challenging environment where you don't control your top line revenue price. If you're Apple, you can set the price of your iPhone, but we can't set the price of commodities. We're price takers, and what we do, and all these gentlemen here have amazing projects that can see the light of day, and more importantly, provide true fundamental value growth for the future. And as a portfolio manager, it's always important to maximize your upside but minimize your downside risk. And I think the recent pullback we've seen has allowed that opportunity to secure a floor of fundamental value for many investment opportunities and provide that equity incentive for growth going forward. We've seen that with Foran, and where we're at after doing all the development and de-risking events we've had. We've seen it across the board with Ivanhoe, Arizona, NorthIsle, Oroco, Koryx, same thing. It's really that floor price and floor fundamental value that we're seeing now, and provide equity investors that real upside and maximizing that return.
That's a great point. This is when you make money in the mining sector, when you have these fundamental disconnects between the long-term fundamentals and the short-term volatility. So that's a great point.
Yeah, absolutely.
Any other comments on that topic?
Yeah, I think, Mark, I mean, being the only company from Africa on this call, I guess we're less focused on the tariffs than my North American colleagues are. We get a full spectrum of smelters out there who are very hungry for copper concentrates. I know some of the projects that we've heard about today will be producing cathode and probably for a domestic or North American consumption. We manage in that risk by looking to market our concentrates across the world, not necessarily just into one jurisdiction, and we think that we can adequately manage that risk through that process.
All right, next topic here. In Namibia or Canada or the US or Mexico, wherever you're operating, do you think that those respective governments have done enough, and they have created a generally favorable environment and favorable policies for critical minerals, and specifically copper? Who wants to take that one?
Well, I'll jump in first. I mean, obviously, it's been headline news in the United States, the shift in sentiment from the federal government to support domestic production of critical metals. And it's a very welcome sign for all of us who are operating in this country. We have desperate need for more domestic metals to supply domestic demand, to rebuild our electric infrastructure, to replenish, and resupply our military needs, to supply copper for data centers and all the infrastructure that goes around technology advancement. So it's never been a better time, and never had a brighter focus domestically on critical metal production. So I think that our government is doing enough, but it's it really, the proof's in the pudding, and they need companies like ours to focus efforts on bringing projects to bear. We're really excited about working together with the administration, and spent a lot of time doing that. So in the U.S., it's a very welcome shift in government attitudes towards domestic mining.
Yeah, I'd like to also concur. Then I think, I actually covered Taylor when he was running it at the Corp Dev Group at Freeport, and so I'm very interested to hear his answer on that one. But like as I see it, in terms of the last 30-40 years, there has been a systemic shift away from Canada, away from the US, to South America, to these Africa, to these large copper producing nations, because there was this this great geological potential, but there was also this ability to sanction projects very quickly, very expeditiously, as Trevor was talking about. And so now what we're seeing over the last 5-6 years, 10 years, we're seeing is that sort of, call it lack of social license or structure around how to get consent-based decisions, have made a lot of these regions, including Ecuador, including Panama, including all these, projects that have spent billions and billions of dollars already in peril, because that social license is somehow lacking. And so, I've always believed that Canada, US, Australia, yes, we suffered in past decades, almost becoming pariah nations for these larger types of projects. But I almost view it as a head start to what is actually evolving in this world right now, which is this much more higher degree of emphasis on social license. And so from that respect, I do think that Canada, the US, we have a 30-year head start on figuring out how to achieve that consent-based intersection between all of its stakeholders.
Mark, if I can add as well,
Sure.
The supply-demand fundamentals are so compelling for copper that the future is bright for all copper producers. The demand supply is projected to be 2 to 1 in 5 to 7 years, implying that there'll be a shortage of the metal. So what does that mean? It means global governments are looking to source the metal locally, and we're certainly experiencing that in the U.S. We have at Arizona Sonoran, we have tremendous support at the federal, state, and local level. And what that will translate to ultimately is a smoother development plan, access to financing, and an ability to produce homegrown copper in the U.S. to access the U.S. supply chain. So, and I suspect that would be the same for our peers as well in other jurisdictions. But there's no question that global governments are now focused in on copper as a critical mineral. And of course, if you watched the news of late, you would have seen President Trump refer specifically to copper and its importance to the U.S. market.
And I think one of the things that the tariffs have triggered is the need for domestic supply. Every country sees having domestic supply as an issue, and we've seen a remarkable turnaround in Mexico for both federal and state government support over the last few months. It's quite remarkable how they certainly want mining in their jurisdiction.
Maybe I would just add quickly.
Incredibly encouraging, the amount of time that we spend in Washington, and to see the speed with which the Export-Import Bank of the United States moved to provide that letter for us earlier this week was very encouraging. And in my 20 plus years in the natural resources sector, and 15 of that with Freeport here in Arizona, I can say comfortably this is the most proactive, the most engaged that I've ever seen Washington in our industry. So that's going to help all of us who are looking to operate in the United States, and particularly those who are U.S. companies. So that's a great sign for us.
Jonathan, did you want to jump in there?
Yeah, I'll just add quickly. I think overall we've seen policy improvement and support for the critical mineral space. I think one thing we need to see more of is expedition on execution and timing of capital flows. I think from our perspective in getting our federal funding, it took over 2 years to go from application to definitive documentation. So and we understand that these are cyclical environments. So if they do take too long, and you could potentially miss out on cycle windows or abilities to raise capital, it's really important for government to understand that these need to be executed quickly, and the cash flow and the structure that the cash is provided also has to be amenable to developing assets. It can't be something the cash is given to you after a construction when you desperately need the cash to build the asset. So overall, it's been strong, and it's going in the right trajectory, excuse me. But we still got to push them to continue to do more.
Any other comments on policy, gentlemen?
Yeah, Mark, I just think that, again, from down here, from the bottom of Africa, Namibia has always been a very mining-friendly country, and I suppose, as Sam mentioned, we've enjoyed the benefits at the expense of the North Americans. And our government in Namibia continues to be the leaders in Africa in terms of developing agreements with the European Union for the development of critical minerals, and especially moving into the green and clean production of metal in country, not only copper but also other metal through their iron processing facilities from green hydrogen. So very positive news coming out of Namibia.
All right. Lastly here, gentlemen, as we get set to wrap things up, is there anything we haven't discussed? Any topic or trend that you'd like to touch on before we go?
I think one of the most important emerging trends in the mining industry today is the emergence of our use of technology to help our industry. And it's the benefits of that are manyfold. First, we need to use technology to our benefit to accelerate the discovery of new supplies of critical minerals we all need. We've all talked about and all read about, the lack of large scale, world scale discoveries of late, and we need that to combat the grade degradation at the world's largest existing mine. So, using technology is a great way. There's technologies being applied, in leaching and other processing methodologies to extract more metal, but we really need to find more metal, big chunky sources of new metal to meet global demand. And we also need to use technology because it benefits our communities and helps attract the youngest and brightest people into our industry, because we need more smart people to come into this industry behind us to help ensure the future success. So I really think that what we're doing with technology on the exploration side is important. And I think for the whole industry, as we adopt new technologies, that's a trend that's very encouraging to see.
Who wants to go next? You concur with that? The technology is a huge trend right now.
Well, it must be for our survival, I guess, is the point. My background, I'm a hydrometallurgist, and my thesis was actually born on dissolution of copper and gold in porphyry sulfides, right? Which is effectively what is happening right now, as we're seeing this sector look to how do you actually start mining waste? How do you start extracting copper from waste? And how do you get that incremental 10-20% recovery from lower grade ores? And that's a welcome change, because you have to have that level of movement in the industry in order to be relevant. I had mentioned that we're taking a data-driven approach. I hesitate to say AI because it's not really AI, but it is a data-driven approach to our targeting predictive exploration program, which has been a fundamental need of mine to ensure that we can actually process and synthesize all this data from our project. So I 100% agree. If we want to attract this elusive group of generalists to our industry that has been lacking for many, many years, we have to be relevant, we have to be disruptive, and we have to implement this movement we see right now.
Maybe I'll just piggyback quickly off of Taylor and Sam's points as well. I think it's they hit it perfectly. I mean, the mining industry is ripe for shakeup here. And at the end of the day, we've had such a brain drain over the last 30, 40 years. Kids coming out of school want to go and work at the Googles and the Apples of the world. We really got to bring them back and really get them to understand that it's the material world that's really going to support the ethereal world. And with us using battery electric vehicle fleets, using unique technologies like with exploration, just like Taylor mentioned for him and Ivanhoe Electric, it's really just trying to make mining appealing for not only for employees but for investors alike, and understanding that it's not really this dirty word that you shouldn't be talking about. It's really the word that's going to be supporting the global transition towards infrastructure, energy, and AI as well.
Any final thoughts from you, gentlemen?
I concur with the view of our colleagues. Technology is front and center. In our particular case, we have a partnership with a group called Newton that's looking to extract copper from our primary material, or chalcopyrite, that otherwise would not have been economic 5 years ago, but has immense prospects for us. But as we view the concept of technology and applying technology, we're still using kind of old tested and true methods with respect to our social license. And we spent years cultivating an excellent relationship with our local community and with the municipal, federal, and state officials. So we look at it through the lens of improvements in technology without really forgetting about what is critical to our success, which is the social license to operate, and try to marry those two themes in terms of moving our asset forward. And we believe that'll present a more clear path to development and a better outcome for our shareholders and, of course, the communities within which we operate.
All right, I think we'll wrap it up there, everybody. Thank you so much for your time today. All of you have very interesting projects, and they're unique unto themselves. And we learned a lot today, and we hope to talk to you down the road. Thanks again.
Thanks very much, Mark. Nice to see everybody. Thank you.
Thanks,
Thank you.
everybody. Thanks, Mark.
Bye.
All right, thank you very much for taking part of your day to join us. And we hope you enjoyed that. This will live on YouTube. I believe we're going to edit it into some more bite-sized segments as well. So look out for those. Thanks so much for joining us, and we'll talk to you next time. Take care.